Sasol CFO has announced that he will step down. Henry Rousseau will vacate the position on October the 31st. This will allow him to oversee the financial year-end closing and the publication of the group's suite of annual reports. The chemicals and energy company says it has commenced the succession process and an announcement will be made in due course. Datatec expects to report a swing to profit. The international ICT firm says annual headline earnings per share are likely to be between 13 and 15 US cents. That's from a headline loss per share of 9.3 cents a year ago. That performance was due to the share-based payments charge on settlement of the Westcon International Equity Appreciation Plan. The group will release results on the 27th of May. Life Healthcare expects first half headline earnings from continuing operations to rise as much as 31.8%. The group says several items affected the results. These include a 2.8 billion rand once-off gain after the completion of the Alliance Medical Group disposal. More detail will be made available when the company opens its books on the 22nd of May. Canal Plus has increased its holding in MultiChoice to 42.47%. That's as the French media group underlines its intent to take control of Africa's largest pay TV company. Canal Plus has been aggressively buying up shares in MultiChoice for almost 4 years, and by March of this year it held a 35.01% stake in the group, which triggered a mandatory offer. Canal Plus and MultiChoice have entered into a cooperation agreement regarding the proposed mandatory offer. MTN Ghana has delivered a strong performance in the first quarter. Profit jumped almost 50%. That's as service revenue grew by over 32%. CEO Stephen Blewett says this was achieved despite a challenging economic environment where the effects of high inflation weighed on consumers and businesses. Looking ahead, the company expects the macroeconomic outlook for Ghana for the rest of 2024 to remain challenging due to high inflation, currency volatility and foreign exchange scarcity, which could potentially affect economic growth and living costs. Factory activity has rebounded. The Absa Purchasing Managers Index improved to 54 index points in April. This puts it above the neutral 50-point mark that separates growth from contraction and is an improvement on the prior month's reading of 49.2. The rebound comes from improved business activity, while better domestic demand filtered through to higher new sales orders. The ANC's ordered Jacob Zuma to appear before a disciplinary hearing for contravening party rules. Zuma is technically still a member of the ANC, although he was suspended from the party in January after he announced his support of Umkhonto weSizwe. Zuma is accused of contravening Rule 25 of the ANC Constitution, which bars members from organizing or participating in activities of another political party who are not in alliance with the ANC. Zuma, meanwhile, tops the MK party list to parliament, which is a contravention of the ANC's constitution. The hearing is set to take place next week. Further afield, Shell delivered first quarter adjusted earnings of $7.7 billion, easily beating expectations on the back of strong oil trading and higher refining margins. Here's more detail on that performance in this report.
Oil giant Shell comfortably beat expectations in the first quarter. The London-listed firm reported first quarter profits of $7.7 billion on Thursday. It credited strong oil trading and higher refining margins. CEO Wael Sawan said Shell delivered a strong quarter while also keeping its focus on delivering more value with less emissions. Shell's performance outdid rivals. Last week, Exxon, Chevron and Total Energies all reported a drop in profits from a year earlier. They faced a sharp downturn in natural gas prices. Shell's Chemicals and Products division was a particularly strong performer. It saw a more than threefold rise in adjusted earnings from the previous quarter to $2.8 billion. Though Shell said the results were offset by a weaker showing from the liquefied natural gas trading business, as sales there dropped 7%. The company also announced it will repurchase $3.5 billion of its shares over the next 3 months. Its stock has gained about 14% this year. Investors have cheered Sawan's efforts to cut costs and focus the company on its most profitable operations.
And Germany's foreign minister has highlighted the urgency in advancing the EU enlargement to include Western Balkan countries, citing concerns over Russian and Chinese influence in the region. Let's cross over to our reporter Ndauling Lachela for more insight.
Well, Zinati, as the bloc marked 20 years since its enlargement to the east, enlargement has still been a major topic on the EU's agenda following Russia's full-scale invasion of Ukraine in 2022. And joining me now as we unpack this further is DW correspondent Chiponda Chimbelu. Thanks for joining us today. Now, Chiponda, as we get started, just tell us about the EU's ongoing enlargement efforts.
Thanks for having me. Well, the war in Ukraine has put the focus on EU enlargement. Countries are lining up to join, and not just for economic reasons, but more so security. Now, that has become more apparent since Russia's full-scale invasion of Ukraine in 2022. On Wednesday, Germany's Foreign Minister Annalena Baerbock said that Europe needs to become a security union. And that's because several countries that share borders with Russia fear that they too, like Ukraine, may be invaded. There are 8 countries in line to join the European Union, among them Ukraine, against which Russia is waging a war, and of course 2 other countries that share a border with it. Moldova and Georgia are also EU accession candidates. But the appetite to grant these countries EU membership isn't big because there are many issues that need to be ironed out.
And what are the major challenges here?
Well, among the bigger challenges are the economic ones. The 8 countries in line to join the EU are all poorer than the member states. Admitting them would mean that countries that now receive EU funds to support their economies would have to turn into donors for the new members. Now that makes admitting the countries less attractive. While the EU could afford to admit some of the smaller candidate countries like Montenegro, granting membership to a big country like Ukraine would weigh on its finances significantly. Ukraine has the biggest population among the countries lining up, and it has the lowest GDP. Billions of euros would be needed to reconstruct the country, which has faced major damages to its infrastructure in the war with Russia. But that's not the only deterrent to admit Ukraine. The EU's biggest agricultural producers fear that Ukrainian food exports would be unwelcome competition.
Lastly, how can we expect the EU to change over the coming years?
Well, let's look back first. The EU won't have another big bang enlargement like it did 20 years ago. Now, the number of member states then rose to 25 from 15 overnight. The EU took in countries that had once been part of the Soviet Union. That would include countries like Estonia and Lithuania. But today, admitting all the 8 EU candidate countries would cost the bloc 256 billion euros. And Ukraine would account for more than 2/3 of that cost. And that would be without the more than 500 billion euros that would be needed to rebuild the country after the war. Now, while enlargement is increasingly a geopolitical issue, the price of admitting new members will also weigh heavily on any decisions in Brussels. So the EU will have to strike a balance between its geopolitical interests and economic ones. And at the same time, it will also need to take into account the needs and interests of its 27 member states.
Let's leave it there. Thanks so much for those insights. That was Chiponda Chimbelu joining us from Berlin.